Hey, it's Brett Fogel from Moonstreamcrypto again with another lesson on how to avoid liquidations, the hidden dangers of crypto trading if you are trading on margin. Traders lost over $10 billion last year in liquidations and over $2 billion recently in February 2025. One mistake and your entire portfolio can be gone if you're using leverage. The biggest reasons for liquidations, people are over leveraging using 10x, 20x, 50x, maybe even higher. It's a huge risk because just a little bit of movement against you can liquidate your entire portfolio. So don't want to do that. You want to stick with lower margin. If you're trading margin at all, we don't really recommend it, especially for beginners, and only 5 to 10% margin, even if you're experienced. If you have 3, 4, 5 or more years trading, maybe you could play with it a little bit more, but really dangerous unless you really know what you're doing. Also, not knowing the difference between cross margin and isolated. Cross margin is, let's say you have 5 positions, they all count toward your overall margin position. So one bad trade could liquidate all of them in your entire account. Versus isolated means that just that position might be sold. So that's a little bit safer way to do it. So make sure you understand the difference between both of those. Another mistake is ignoring funding rates. Funding rates vary and fluctuate, but also are costing you money for borrowing that leverage. So unless that trade is going in the right direction, over time and every time that funding rate resets, you're getting charged additional money. Not everyone realizes that. Also, another big reason that liquidations happen, market maker manipulation. Certainly they have that. If you think about this, the best chess player in the world 20 years ago was beaten by a computer. Imagine how good the market maker algos are today. They're there to take your money. They can move price, and they often do. So just be aware of that. If your liquidation price is really close by, they have the ability to move them up and down. I've seen it firsthand, and it's not that they're targeting you specifically, but in general, many traders sort of think the same. And so these liquidation levels, just remember, they can see those and they can move markets along with whales who also can see these liquidation levels. There are heat maps that show that. Big money whales will often target those along with the market makers because they themselves are whales. They have lots of positions. So be careful with that and when using margin in those situations. So how to avoid liquidating your account? Basically, again, use low margin, 2 or 3x when you're just starting out, maybe 5 to 7x, you're a little more advanced. You don't need a lot to be profitable, and you don't want to be betting your entire account. A huge way to blow out and get wrecked, so don't do that. So 2 to 5 max, unless that you're experienced, like I said. And also make sure setting stop losses, because even though the market makers can see that, and sometimes they will have a stop hunt, it's better than having the thing run from you and then your emotions take over and you say to yourself, well, I can't sell here, I'd lose too much money, and then your account gets liquidated. So make sure that you're setting those stop losses either on the exchange or at least mentally with alerts and being disciplined to get out of that trade. Preservation of capital is paramount. I always tell my students, make sure you have money to play a different day and never risk your entire account. Also, again, don't let emotion derail your plan. Plan your trade and then trade your plan. Very important. So otherwise, you see a lot of new traders get wrecked. I'll just tell you a personal story. Back in 2022, I was in a highly leveraged short. It was a near $1 million short on Bitcoin, around 40K, and I was right in the direction. But the short squeeze, the market makers, the whales, whoever they are, we don't really always know, and it doesn't matter. They push prices up to 44,000, and I had money on the way in to raise the liquidation price, but the exchange held that money, and in a small candle popped up, liquidated my position, and then the money came in, but it was too late. I didn't lose $1 million. I was a 6-figure loss, however, very painful and very important lesson to learn. So learn from that and don't let it happen to you. So just in closing, watch our other videos, or if you'd like our free guide on how to prevent liquidations, just comment safe down below. And if you'd like more information or you'd like to book a call with me for some one-on-one coaching or to help me optimize your perfect crypto portfolio in this bull run, you can go to moonstreamcoaching.com.